Welcome back guys to ICT Trading Concept. How are you all? I'm very fine. So in this video, I'm going to explain about the last fair value gap. I always talk about this, and trust me, if you watch until the end, you will understand why this is so much important than any other thing to your chart. No PDRA, premium discount array, or no breaker block, order block, nothing. I mean, if you just if you can understand the fair value gap, the last fair value gap or the fair value gap, that's enough for your trading. Okay, so I'm in 15-minute chart, and this is the gold chart. Stay with me, don't just leave. Okay, don't leave from here. Stay until me until the end. You will learn so many things, trust me. Look, this is a leg, this is the last fair value gap. Okay, there is no fair value gap from that leg. This is another leg. To this leg, this is the last fair value gap. When price started to fall, there is one fair value gap, another fair value gap, the last fair value gap. Okay, so actually let me change the color so that it will be easier to understand what do I mean by that. So these all are from the 15-minute chart, and this is the last fair value gap. So I have just changed the color. 1 2 3 4 last fair value gap. Now I'm just going on after another. You will go to your chart and you will mark all of this level. If you do this, you will learn. If you don't do it, you won't learn. Okay, so what do I mean by holding the price, and when price will go through, how I actually read the price? I will talk about first this fair value gap, then this fair value gap, after that this fair value gap, and finally this fair value gap. Okay, so these 4 fair value gap I will talk about, and all of them are the last fair value gap. Now when price will come to the 15-minute last fair value gap, you have to go to 1-minute chart. So this is the first fair value gap when price was falling from there. Okay, it is just falling. When it come here, this is the last fair value gap to that specific leg. So this is the price leg. This is the last 15-minute fair value gap. Now look, when price come to this last 15-minute fair value gap, what happened? It failed to hold the price. The last 15-minute fair value gap failed to hold the price. You see, it went below the fair value gap 1 2 3 times. So first time if it happened, it's kind of fake breakout, but the fake breakout, if it continue to happen, then that is not actually fake breakout. That is actually showing you that I failed to hold the price, so price will go lower. Okay, so when price failed to hold the price, the last 15-minute fair value gap failed to hold the price. After that, I didn't get any setup over here. Okay, when it will fail to hold the price, I will look for a sell setup. Now it started to go higher. Okay, when it has started to go higher, I'm not thinking that market is going up and take some kind of liquidity. You see this high and that high, they are relatively equal highs, so that is very clean buy side liquidity. So I'm not thinking price is going toward that buy side liquidity. Instead of that, I will think the low below this fair value gap, that is more obvious. Okay, this is going to be triggered. So this is the fair value, the low below that 15-minute fair value gap. This is the low. So I'm going to mark that as my sell side liquidity, though this is not my sell side liquidity, but I will think market will take at least this low. Now if it is extreme, then it will reach to this last fair value gap from another leg from 15-minute chart. You remember I have marked it from another leg, 15-minute chart. Price started to go higher. Where did it go? So this is the 1 minute candle, 1 minute price leg. Look, do you see any fair value gap over here? No, I don't see. Here, no. So this is the first fair value gap. In my opinion, this is the last fair value gap. Okay, when price started to fall from here to here, this is the last fair value gap. When price will go again over there, I will see the way I saw the price over here. Okay, if it can hold the price, then I will think it has taken all of this buy side liquidity. If it failed, there is much more possibility market will take that buy side liquidity. I'm just reading the price. Okay, now when it hold the price and gave me another setup, market has taken the buy side liquidity, market structure shift, fair value gap. You can take your entry over there, and your target will be maybe some kind of this liquidity, this equal lows, that could be your target. Let me actually mark it. This low and that low. Okay, both of those lows made this as a sell side liquidity. Okay, so that could be your sell side liquidity. You can take your entry over there. See again, let me mark the setup over here. Market has taken the liquidity over there. I got the market structure shift over here. This is the market, though it's very small or little, but it's the market structure shift. There is your fair value gap. So you can take your entry to that fair value gap, and that sell side liquidity will be your target. Okay, very simple, guys. I am just using the last fair value gap. So price came to this 1 minute last fair value gap, gave me the setup. There was a very nice entry over there. Later price has actually traded this water block level. This is the water block. Sorry. Price came back to the water block, it fall, and finally it has taken the sell side liquidity. Okay, at the same time, if you are not willing to take that entry, it's perfect. I took an entry over here. I'm sorry, guys. I took my entry depending on the breaker, high, low, higher, high. So that was the breaker block. Okay, so this candle's low and this candle's high, that was my breaker block. Price came to this breaker block. Actually, this fair value gap aligned with the breaker block. There was another setup. Market has taken buy side liquidity. Market structure shift. This is the entry fair value gap. This is the last minute fair value gap or the breakaway gap. So price come to this fair value gap. At the same time, there was the breaker block. So I took my entry over there, and I have uploaded the video live. Live entry video to my channel. If you missed it, please watch it. I have just uploaded that yesterday. Okay, so you will find it. Okay, so price come to this breaker block, then it went lower, and it has taken the sell side liquidity from here. Now there, because of the spread, my order didn't fill. Instead of that, it went higher. As this is the paper money, so I don't care about this. Okay, whatever. But if it was Nasdaq, that would be a perfect entry. I add more over there because of the inversion fair value gap. That is different thing. Whatever. Now market went lower one more time. Breaker, taken the sell side liquidity. Okay, now this 15-minute fair value gap, I talked about the 1 minute setup. Okay, when this 15-minute fair value gap actually failed to hold the price, my thinking is market will take this low. Remember this low, it should be taken. If market is overzealous, then it will reach to the 15-minute last fair value gap, another 15-minute last fair value gap from another leg. Okay, so price went higher one more time. Where did it came? To this last 1 minute last fair value gap. Then it went lower. There was another setup over here. If you are interested to take that setup, that is also valid, because there was one setup. If you fail, another setup fail. If you can take another entry over here to that specific moment. Market has taken the buy side liquidity. Market structure shift. This is your fair value gap. Market come, look at that candle. It just tapped to this fair value gap. This fair value gap, the 22 IT model, and then boom, market fall. Boom. Where did it came? It has taken the sell side liquidity. It came to the last 15-minute fair value gap. Now, when price come to this 15-minute fair value gap one more time. Okay, this is another 15-minute fair value gap. I am just watching the price the way I watched the price to this 15-minute last fair value gap. So I will watch the price the same way over here. When price came here to the first time, was there any buy setup? I didn't see any buy setup. Market will take the sell side liquidity, market structure shift, fair value gap entry, boom. No, there is no setup over here. Price came back one more time over here to the consequent encroachment, and there is a market structure shift. This is also a market structure shift. I'm not arguing with you, but you can see there is a little consolidation. Okay, so I actually love to see some kind of clean market structure shift like this. Market will take the buy side liquidity, market structure shift. See the clean market structure shift. There is no consolidation. Okay, let me find it one more time. Okay, here market has taken the buy side liquidity, clean market structure shift. Okay, so I actually look that type of, but over here, just look over here, there is a long time consolidation. This is the consolidation. So this market structure shift, I'm not going with that, as because it has already made some kind of liquidity over here. If after happening this swing high, if I saw another candle went above this high, I mean the same thing, if I would see that over here before just consolidation, I would love to take my entry over there. But as there was a consolidation, I was waiting. Price went higher, make relatively equal highs. Look, that high and that high, they are relatively equal high. And I'm going to remove this sell side liquidity because I have to explain so many things over here. So I can see there is actually the relatively equal highs. That is my buy side liquidity. See, this high and that high, they are relatively equal highs. Now price went lower than this low. One more time, it has taken the sell side liquidity. Okay, when it has taken the sell side liquidity, then I got my market structure shift. At the same time, this 50-minute fair value gap also failed to hold the price. This is the fake breakout. So it has failed to hold the price. Now there is my market structure shift over here. I mean over there. This is the market structure shift. Price has taken this sell side liquidity. This is the last time price has taken the sell side liquidity. Okay. So that is the sell side liquidity. If you would love to mark this one as your sell side liquidity taken, that is also valid. Though it didn't shift the market over here, okay, to that specific candle. If you would see, this has actually shifted the market over here, then there was a very nice setup over there as well. So two fair value gap setup, that was perfect over there, but it is what it is. Actually market didn't shift over here, so that setup wasn't valid. Instead of that, after getting the market structure shift here, I got this fair value gap. This is the fair value gap. Okay, so price went higher. Now when it hold the price, the last 50-minute fair value gap hold the price. Now I'm expecting some kind of higher run. Okay, it will go higher. That is my belief, that it will go higher. It went above and it has taken this buy side liquidity. As I had no chance to take my entry over there, I didn't see this one as my market structure shift. Actually, let me mark it until here. This candle didn't go above that candle, so that wasn't actually valid market structure shift. I didn't take that entry. But if it could go little above, that was my entry. I would take that entry with confidence that market is coming toward that buy side liquidity. Now not every time you will see this, you will get, I mean you will find most of the time the perfect setup over here, but as it didn't give me, I didn't do anything. Now when market went above, where did it go? I have marked the fair value gap from 1 minute chart. So this is the last 1 minute fair value gap. Look, very clean 1 minute fair value gap. Anybody has any confusion? From 15-minute chart, I got my direction that market is not falling, it is going higher. Okay, but when it comes to the last 1 minute fair value gap, I'm expecting some kind of reaction from that last 1 minute fair value gap. So price come here, I saw this as a liquidity taken. When and how? Look at this high and that high. Okay, this high specific that has made relatively equal highs. Price has taken that sell side liquidity, I mean the buy side liquidity, then boom, just broke. Okay, so it is the broken, or you can say the market structure shift. If you would love to mark that one as your market structure shift, that is cool. If you would love to mark your market structure shift from here to here, that is also cool. Whatever you want to do, you can do, but I would love to go with here because that is enough for me to think this is the market structure shift. It has made all of the rules. Okay, so when I got the market structure shift, I got this fair value gap and this fair value gap. So there was two fair value gap. I have taken my entry to this fair value gap and my stop loss actually covered the upper fair value gap. Okay, I mean this fair value gap, my stop loss covered that fair value gap because price can reach over there. Where is my target? This is the last fair value gap. Look at this leg. Okay, to that leg, to that specific leg, this is the last fair value gap. From here to here, there is another fair value gap over here, that is the extreme one. I have explained this why when I will observe that fair value gap, there is some other reason. Actually the most obvious liquidity was over here, so it is actually below the liquidity levels. In my opinion, that is not even worthy to mark right now. Another thing, okay, but in my opinion, this is the last fair value gap. If price failed to hold over here, then I will think about this last minute 1 minute fair value gap. So you can see price didn't came here as because it is just below the extreme sell side liquidity. Okay, and this is actually have a mark, but the real liquidity was above below this consolidation. This is the consolidation. Remember what I told here, this is not market structure shift because of this consolidation. So price has actually taken this consolidation. This is the market stress, I mean the liquidity taken over here, and all of those fair value gap are actually below the sell side liquidity, so that is not valid. Where price came to this last fair value gap, so I took my entry over there. My target was over here to this last fair value gap. I have just uploaded it to my Twitter. If you see, you will get it. I mean, you will get it. Okay, so I think I have marked this low as my target. Later, because of the spread, it didn't fill here. Later, it went lower one more time, and then I filled my, I mean, the target over here. Okay, see over here actually. So when price come here, then I got out. I mean, my target profit hit over here. Now, where price came to the last fair value gap, also the 15-minute last fair value gap. It went above one more time. Did it give me any kind of market structure shift over here? Yeah, I got my market structure shift over here. So you can actually mark this one as your market structure shift. Okay, this I'm just showing you how you can read the price with just using the last 15-minute fair value gap or last minute fair value gap. Okay, so it has taken the sell side liquidity. Both of these sell side liquidity are the sell side liquidity. I will go for, I mean, yeah, I can just let me mark this one actually, because this is actually the pure liquidity. That low and that low has made relatively equal lows, and that was just a week, and there was some kind of news or something, because that is abnormal week. So I will go for those relatively equal lows as my liquidity taken. So I got my liquidity taken over there, and I got my market structure shift. Do you see this is consolidation? Like here the consolidation was over here. No, this is the clean market structure shift. Okay, if you get a swing high over here, then market shift over there, that is perfect. But as I didn't get it, and I am pretty much sure that market is going higher. I am pretty much sure market is going higher. Why? Because the higher time frame last fair value gap hold the price. It never broken. I got market structure shift, liquidity taken. Where is my, I mean the fair value gap? Where do you see the fair value gap? Now this is a fair value gap. It is I mean controversy. If you would love to make some kind of controversy, you can do it, because it is just below the sell side liquidity level, and that is why I really don't want to mark that one. But if you would love to mark it, you can mark it. Okay, and there is another liquid, I mean fair value gap over here, very small. I'm not willing to mark that as my liquidity level, or I mean the last fair value gap. I don't want to mark it. Okay, so I can see there is only one fair value gap. This is my fair value gap. There is no other fair value gap that is valid where price could go. So in my opinion, this is the only fair value gap. Okay, so actually I can make it until here. This is the only fair value gap I can see. Now if you would love to take your entry over there, where should be your target? To this last fair value gap. Okay, now as the higher time frame is telling me market is going higher, then only then you can target that high. Okay, if you see any kind of relatively equal highs over there or very clean buy side liquidity, you can target all of those. You can do it, but it will reach at least to this last fair value gap. Okay, now when it will reach to this last fair value gap, I will see if it can hold it or not. If it failed to hold, then this high will be most, I mean obvious target. Okay, that high will be most obvious target. When that high will be taken, I will look at that fair value gap as well. If it failed to hold the price, then this high will be more, I mean more obvious. Go step by step. Okay, that high will be more obvious. The same thing, if this, I mean when it will be taken, what is your last fair, I mean fair value gap from that leg? This is your last 1 minute fair value gap. If it failed to hold the price, this high will be your target. There is another obvious high, that is your obvious high. So that high will be your target. Where when it will reach over there, this is your 1 minute last fair value gap. You will observe this one can hold it or not. See, until here it hold the price, here hold the price, here hold the price. This is the first time it's broken, and this is not fake breakout. Okay, when you see this is actually broken, you will start to look for a buy setup because it's broken and it's telling you I'm going higher. If it would love to go higher, where is your most obvious liquidity, or which swing high should be traded? This is the high that should be traded. At least it should be traded. Okay, now above that swing high there is another 1 minute fair value gap. You will observe the same thing, and this is actually the last 1 minute fair value gap. I would love to go with that. Okay, over here. So when this one is also broken, I will look for the relatively equal highs because there is no other high, so that is the high. So when it is broken, I will look for a setup, buy setup. Here everything you will go and you will see if you get any setup over here or not. I will talk about this setup, though it is not at the session time, but I would love to talk about this setup. So this is the 1 minute fair value gap, last fair value gap. It went high, it's broken. Okay, now price went lower. When it's broken, do you see any sales and liquidity taken? Higher market structure shift over here? No, price is just falling. What do you think? Market is going lower? No, I'm not thinking like that. Why? Because I saw the last 15-minute fair value gap has broke. I mean the last minute fair value gap is broken. So this liquidity, this is the recent swing high. Look at that high. Okay, above that last 1 minute fair value gap, this is the only high. As there is relatively equal highs, that is more stronger. There should be your target. That should be your entry point. Okay, so it went lower. I'm thinking it is actually, whenever it is going lower, I'm thinking this is the time to take your entry. This is the time to take your buy entry, buy entry, buy entry. And finally, price has taken this sell side liquidity. Anybody has any confusion? It has taken this relatively equal lows. So it has taken the sell side liquidity over there. After taking the sell side liquidity, do I get any market structure shift? Let's see. Okay, I have a very nice market structure shift over here. After shifting the market, is there any fair value gap? Okay, let's see. So I can see there is a very nice fair value gap. If you would love to take your entry, just let me show you. Look over here. Okay, I'm repeating the same thing again. When price came to this 1 minute last fair value gap, until here it was holding the price. Okay, then price went lower. I was thinking price will go low. Until here I was thinking price will go low. To that specific candle, I'm thinking price will go low. So I am waiting for a sell setup. No sell setup over here. Buy side liquidity taken, lower market structure shift. It didn't happen until here. Okay, then this round. What does it mean? That means this 1 minute last fair value gap failed to hold the price. It is telling me I'm going higher. Now I'm not looking for any sell. That means it has taken buy side liquidity, very nice market structure shift, maybe fair value gap. I will take my sell. No, I'm not interested to take sell anymore. I'm interested to take buy. When it will start to go lower, I will just wait. For what I will wait? I will wait to take sell side liquidity, market structure shift. Sell side liquidity taken, market structure shift, I will take my buy. When price come here, you can say, brother, it has taken a little portion of the sell side liquidity, then there is a market structure shift over here, fair value gap. Why you are not interested to take your buy over here? The only reason, I can see very little, I mean relatively equal lows over here. That is very obvious. Okay, if I ever see that type of obvious liquidity, see what is the difference from here to here? There is much more possibility market will take that liquidity because that is more obvious comparing with this. So that is why I'm not interested to take my buy over here. I am waiting. Now if it went higher without taking that sell side liquidity, maybe I will miss that move. I'm happy with that. I'm not thinking that okay, I have to take an entry, but I will go for high probability. As this liquidity is more obvious, price has taken this liquidity. Now I will look for buy. Okay, I hope you will understand the theme. And also this is the actually pure consolidation. This is not actually the setup. If you see in a broad way, this is the consolidation. Market has taken the sell side liquidity, market structure shift. This is the fair value gap. That should be your entry. Your stop loss will be below this, and here will be your target. Look, market never come back again. It never manipulate again. Where did it go? To this buy side liquidity. Now remember, there was another two last minute fair value gap from 15-minute chart. So this was the first 15-minute last fair value gap. This is the last 15-minute fair value gap. Okay. So when price come to this 15-minute last fair value gap, I was thinking it will hold the price. It will hold the price and it will send it back lower, and it will take some kind of liquidity from here. You see this low and that low, they are relatively equal lows. So maybe market is going to take that sell side liquidity. That is my thinking. Okay, just let me actually mark the sell side liquidity because that will be easier for you to understand. So when price come to this last 15-minute fair value gap, go to your chart, mark this 15-minute fair value gap, everything from the beginning. It will be easier for you to see the price. Okay, so I was thinking price will hold the price, it will take some kind of buy side liquidity, market structure shift, fair value gap, I will take my sell over there, that will be my entry. But what price did? It went above this last 15-minute fair value gap. That means it failed to hold the price. Now I am not interested to take my sell. Do you get my point? I am not interested to take my sell over here, not anymore. I am interested to take my buy. So price went higher, it went lower one more time. It has taken little liquidity over here. Let's look at this low. It has just traded that little liquidity also. It has traded this 1 minute last fair value gap. Just let me mark the fair value gap as well. I will use this one. So it has traded this last 1 minute fair value gap. Look at this run. See this run, this is the last 1 minute. There is no other fair value gap below that fair value gap. That is more obvious in my opinion. So this is the last fair value gap. How it hold the price, how beautifully. Okay, then I got another market structure shift over here. This is my market structure shift. When it has shifted the market, immediately I will go for the first fair value gap. So this is the first fair value gap. This is the first fair value gap, and that should be your entry point. Okay, so that should be your entry fair value gap. Why I am willing to take my buy? The reason is this last 15-minute fair value gap failed to hold the price. That is why that means market is going to take the high. Okay, now above this 15-minute fair value gap there is a high, but that is too close to that fair value gap, so I'm not willing to take that on. I would love to mark that high. That market is actually going to take that high. It has to take that on. Okay, this is the rules. When the 15-minute last fair value gap fail to hold the price, it has to take the recent swing high. If you see relatively equal highs, that is perfect. Okay, and I go actually if I see relatively equal highs. If I see one swing high, I don't go for that trade. But I'm just showing you the precision over here, that how it works. Okay? So price came to this fair value gap after shifting the market one more time over here. If you'd love to mark that one as your market structure shift, that is also cool. Nothing wrong over here, but you have to wait. You don't need to worry about this fair value gap. You have to wait until it will come here. So that should be your entry point. When price came to this fair value gap, that should be your entry point. Your stop loss will be just below that swing low. Where should be your target? You can target it until the last 15-minute fair value gap, or you can target that buy side liquidity, but I will go for that one. Okay, the low of this last fair value gap, I will go for that. Okay, then price consolidated little bit, and finally it hit my target. Even it went above that buy side liquidity. See, very little run, though it's very little run, but it went above that swing high. So if you even target that thing, that is also perfect entry for you. That will be a perfect entry for you. Okay, now this again it came. Where did it came? The last 15-minute fair value gap. This is the final fair value gap from the 15-minute long run. So price come to this 15-minute fair value gap, it hold the price perfectly. Even the body didn't close above the consequent closement. When it hold it and gave me another market structure shift. See, this is my market structure shift. Okay, let me actually mark it. This is my market structure shift. MSS. Now it hold the price. What does it mean? That means you have to look for the liquidity now. What do I mean by liquidity? I always go for the relatively equal lows or relatively equal highs. So I'm not interested to take that buy. I'm interested to take that sell. Okay, I am just interested to take that sell because I have very clean sell side liquidity. Look over here. I was very much interested to take the buy over here because I have very clean buy side liquidity over here, relatively equal highs. So I'm interested to take that buy, and I'm interested to take that sell. After shifting the market structure, I will look for the first fair value gap. Okay, so this is the first fair value gap, and this is my entry fair value gap. Okay, I will take my entry to this fair value gap here. So when after shifting market structure, when this happened, okay, after shifting market structure, when this thing happened, I will take my sell over here. And where will be my stop loss? Just above the swing high. Where will be my target? Here. There will be my target. Now, as it is not Nasdaq, if it would be Nasdaq, then maybe I would put my stop loss somewhere here above, just above the breakaway gap. You can see it stopped me out, but 99% of the time I won't be stopped out. I mean, the body will never go above the consequent encroachment of the breakaway gap. So as it is other market, I mean, I don't expect the the precision from here. So I will put my stop loss to a level where price should never go. Okay, as the 50-minute last fair value gap hold the price, and I got the setup. Market has taken all of these buy side liquidity. See this high, that high, and this high. All of these three high made relatively equal highs. Price has taken that buy side liquidity. After taking the buy side liquidity, very clean displacement, market structure shift. This is your two fair value gap. Now, if you would love to take your entry over there, that is also good. I mean, there is nothing wrong with that. But I go for this fair value gap because you see here, if I would wait to reach over here, I would miss that entry. Okay, here it is perfect, and if I can show you, okay, over here, if I wait price to come over here, then I would miss that entry as well. Okay, so this is the thing. I go for the obvious one, and I really don't I don't get bothered by the stop loss because most of the time I'm confident that I'm gonna be the winner, so I really don't be bothered with the stop loss. So I put the stop loss at the level where it shouldn't go, and finally it has taken that sell side liquidity. Okay, now when it has taken that sell side liquidity, I mean the specifically sell side liquidity, this low and that low, they are relatively equal lows. Do you see any other relatively equal lows before this lows? Do you see anything over here? I don't see. So that is the 1 minute liquidity. If you ask me about the extreme one, I can see this is the extreme liquidity, or here also I have another relatively equal lows. Let me mark it as well. So I believe later it will be targeted. I mean this low and that low. So I have the extreme liquidity over here, maybe some also here, this low and that low, they are relatively equal lows. I have extreme liquidity over there, so this is not my extreme one. I can easily hold my trade until here. Maybe I will take a partial when market will come below that low. Okay, when it will come below that low, that is the perfect place for taking the partial. So maybe I will take a partial over there, and you can see this worked perfectly. So this is the way I read the price, and I just force you to understand the 50-minute last fair value gap. When price will reach to that last fair value gap, you will see two things. Okay, either it can hold it or not. If it can hold it, then you will look for a buy setup. If it failed to hold, you will look for the sell setup. When price come here, you will see the last 50-minute. Look this leg. Okay, look at this leg. This is the last 50-minute fair value gap. From here, this is the last 15-minute fair value gap. Now it has traded before. I don't care about that because this is not balanced. Until it is balanced, I will mark this. I mean, I will keep it to my chart. Okay, so that is the reason I do this type of things. Whatever. If you get it a little bit insightful, please subscribe to my channel and give me a thumbs up. If you would love to share my video link, that's unexpected for me, so it's all up to you. Okay, see you guys. And if you have I mean, one more thing, if you have any confusion, please don't hesitate to, I mean, let me know that by the comment box. And also you can connect me with my Twitter. You will get the the link to my description. uh, Also, if you would love to see it from here at the rate of NRT12345 ICT Trading Concept, you can find my Twitter over here, and you can connect with me over here. Okay, so it's up to you. Thank you guys. Bye bye.